Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Monday morning pre-market webcast. S&P 500 E-mini futures daily chart, and what you have there is a serious band ride expansion to the downside, more severe than anything we saw in October of 2014. So, from our perspective, we tried a couple longs last night that worked. We tried one that didn't work, and the key is, we tried one this morning just now that didn't work at all. But at this point, the key is to cut risk, to manage risk. There's going to be a big rally, but it's not worth getting run over 2, 4, 6 times before the rally comes. It's not worth it. They've already rallied at 30 handles off the low in the middle of the night. They went from 1911 up to 1942 and change. That's come basically all the way back now. So the best thing to do is to just kind of set aside all of the things that are happening and just trade what you see. My suggestion is for a lot of you on a day like today to leave it alone. Okay? It's very fast. It's very violent. If you're inexperienced or you have a small account, if you're not used to trading futures, a day like today can really get you hurt. And it's just not worth it in the big picture to come in and try to trade this kind of a day because it seems to be interesting or exciting, or you feel like you're missing out if you don't. I mean, that's what drives a lot of people to trade. They say, we're gonna get a bounce. A bounce is gonna come. I want to be in on the bounce. Well, the trouble with trying to be in on the bounce is there's about 20 false bounces before the bounce. And it's in the 20 false bounces before the bounce that gets you basically demoralized and gets your account depleted and everything else. Then the real bounce comes and you're not in, and then just psychologically you're done on a whole other level. My suggestion is just to avoid all that. Tell yourself, it's just too fast of a market. This thing's going to stop going down when it's ready to stop going down, and then there will be opportunities to the upside then. Until this thing starts to build consistent higher lows, we're not going higher. I haven't been shorting since Friday because the worst setup traditionally has been to do what I call shorting in the hole. Shorting in the hole has been guaranteed death. Now, once we get into the regular session, if we continue to make lower highs, then that's something that you can lean on as far as being able to sell rallies. But for now, in the overnight session, it's very difficult to sell a move that's gone down 50, 70, 80, 100 handles because of the risk of what could happen if the rally starts, and you could really get run over, worse than you can trying to buy lows. So, long story short, this is a time to protect your capital. Whether you're a bull or a bear or something in between, this is a time to protect your capital, wait for the market to slow down, and offer reasonable setups with reasonable risk. Okay. All right, so everybody have a good one. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. We got some interesting stuff up there talking about Friday's trade and Thursday's trade. Talking about, I laid out my feelings this week about how to handle, losing trades. And on days like today and days like Friday and Thursday, there are going to be red trades. And how you handle the risk of a red trade, your ability to cut that trade and what that trade's going to do to your mentality going forward is critical. So come check out the chat room. So many new people starting. It's a great time to start because you'll all learn together. We would love to have you. I'll be back tomorrow morning with another webcast. I'll be doing another webinar Wednesday after the close. The sign up for that is on my Twitter page and on the website, so I hope to see everybody there. And I'll be back tomorrow morning. So trade them well, everybody.